Nigeria's largest licensing round since the enactment of a new petroleum law in 2021 saw several little-known indigenous firms secure prized assets ahead of established players, including Nigerian National Petroleum Company. Meanwhile, OPEC Plus approved 188,000 barrel per day production increase for September, raising fresh questions about Nigeria's ability to ramp up output, attract investment, and maximize the benefits of higher production quotas amid a changing global oil market. To unpack this, I'm joined by Femi Oladehin, Managing Director, Argentil Capital Partners. Thank you and good morning to you.
Good morning. Always a pleasure.
You can say that again. Talk to us. What are your biggest takeaways from Nigeria's latest oil block licensing round?
The biggest takeaway is that very small players, had a big showing in the bid rounds, I think it's testament to the developments in the local oil and gas industry. One of the things that has happened, as you know, in the last 10 years, 10 to 15 years, is we've seen a lot of local indigenous players become, prominent in the market. And the fact that the NNPC, the NUPRC was able to attract almost 150 companies into the process in itself is testament to the credibility of the process, credibility of the entire structures around the oil and gas industry, the promulgation of the PIA Act, and of course the general improvement in the production sphere of the market. Now, I think the bigger issue, honestly, would not be whether these small players have the capacity to operate these assets or deliver on them. I think the bigger issue will still be around the fiscal frameworks that allowed investors to be able to, play a part in the market by just being a key player in the market and being able to attract capital. I think that's where the big elephant in the room has been in recent times in the market. The ability of the players to attract capital, the developmental capital that's required to keep that industry funded.
All right. Well, clearly 13 blocks attracted no bids. And just like you already said, we saw, big firms being outbid and all of those things. But what's your reading of those 13 blocks? What happened?
So most of the blocks that did not receive any bids were deep offshore blocks. The reality is that the deep offshore blocks are usually more expensive when it comes to discovery and pre-production costs. So we're not surprised that some of those blocks did not receive any commercial bids. The truth is that the ones that received a high level of commercial bids were the ones that were closer to shallow waters and the swamp areas around the Niger Delta, and that's because the cost of re-entry, the cost of going into those assets, relative to the deep offshore assets, is significantly lower. The reality, like I said earlier on, is that investors are quite positive on the market, but that positivity is within the context of a broader economic environment, a broader oil and gas industry environment, and broader financing requirements in the market. So, investors are going to prioritize assets that are quicker to market, prioritize assets that have lower production costs, and of course, with higher prospectivity. So I don't think that there is any surprises there. I know that the NUPRC is going to repackage those assets and probably try and bring them to the market again, probably in the next bid round. But they would have to take the feedback from the market on the 13 that had no bids.
Absolutely. I want us to talk a bit about the scores, and that's because I have seen a lot of persons talking about, the possibility or otherwise for a particular company to score 100%. So we had Dutch Ford scoring 100%, while NNPC had 73%, now 33% for technical submission and 40% for commercial. That's for NNPC. But when you look at Dutch Ford weighed, had a weighted technical score of 60 points. That's almost double what NNPC scored in that metric. Is this what looking at, really?
So, unfortunately, we don't know the capacity of Dutch Ford and what they demonstrated. But, there are several parties who played a role in these transactions. And look, at the end of the day, the NNPC has been an operator in just a very few assets. Most of the investments that the NNPC has, where their joint venture partners are the operators of the assets, especially the largest ones, if you understand what I mean. So it's not like the NNPC has historically a checkered history when it comes to operating upstream assets. They've usually been a partner to operators who are operating the JV assets, at least in recent times. So it appears that particular point, came as a negative for the NNPC. But I still think that overall, the NUPRC is basically saying that it was a transparent process. The way they were able to score the individual players was based on a template that was shared with all of the bidders. And if NNPC, did not, come tops in those numbers, it appears it is what it is.
All right, I like what you said about, what NUPRC also said, but I'll put this to you again. How easy, really, is it for a bidder to achieve full marks? 100%. And just to also reiterate what you said, NUPRC had sort of dismissed some of the claims that it reopened the portal to allow people to probably modify their applications and all of those things. I don't know, do you want to also speak to that?
So honestly, I don't have any information that validates that. We participated in the bid process, and there was not any opportunity, to go back into the portal. Now, if they did that in a back door, I honestly have no visibility on that. But look, on the possibility of someone scoring 100%. It almost sounds implausible. I've actually never seen a bid process where somebody scores 100%. But if there is an objective framework that the NUPRC introduced as part of the process for selecting bidders, we honestly have to trust the process that they did their job professionally, and if anyone was going to do a post-mortem on the transaction, that it will pass the smell test. So I'm holding out my hat that NUPRC did the right thing, and it was a transparent and open process. It would be a travesty if the information that eventually comes into the market shows that it was anything but transparent.
All right. Well, for a lot of people who are watching this process, they say that it would seem the government intends to sort of broaden the operator base. But do you think the NUPRC has sort of fully considered execution risk for some of these less known companies that sort of, had upper hand in this particular exercise?
So in fairness, that has always been a problem for the industry. The truth is that from the first bid rounds that President Obasanjo did post the military regime till this 2025 bid round, we've had several bidders who've won assets and have not been able to develop them. In fact, I know that the 2023 bid round, there are still players who have not been able to do anything with the assets that they acquired, either because they've not been able to raise the financing or the economic environment has not, supported the level of investment that's required in those assets. The second element would actually be the validity of the data that formed the basis of the bids. So the truth is that at the end of the day, what people are going to be looking for when you are going into a pre-production, investment in an oil and gas industry is, first things first, is there proven reserves in the ground that you can extract? And then are the reserves extractable? So that's really what forms the economic basis of whether a bid round is worth it or not. Now, the question here is, there's very limited information that any of us have to suggest that, that process wasn't done. However, the jury is always in the numbers, and the jury is out. The reality is that of all the bid rounds that have happened prior, we know for a fact that not all of the winners have been able to monetize the assets that were given to them. We're hoping that this is not the same outcome in this particular process.
Right, let's talk about the government's target, which is 3 million barrels per day. If sweated judiciously, do you think these assets could add, 300,000? Well, let's say if sweated judiciously, these assets actually expected to add 300,000 barrels per day in production. So talk to us, how many more do we need to meet that target, or do we already have enough?
So look, there are two challenges that we've had. And if you look at how Nigeria's production dropped dramatically, the first challenge we had was post-COVID. COVID was when we saw almost a 500,000 barrel per day drop in production. And we've not been able to go back to those pre-COVID levels, of course, because one of the things you have to understand is an oil field or an oil well is not like a borehole, where you drill and once you get in there, water keeps coming out. An oil field requires pressure, and every time you shut in an oil field, the pressure drops. It's just scientific. So the truth is, for us to continue to increase production, first we have to put in the investment that maintains the current production. And then you then have to do incremental production increases. So the challenge we've had is, first things first, the investment that was required to maintain production did not happen. And then now we have a situation whereby we need to do incremental investments to increase production. So unless we were able to solve those two problems, and it all goes back to capital. It's not a technical issue. It's a capital issue. It's a fund-based issue. As long as we can solve that problem, then we can increase production, and hopefully by 2030 we reach the 3 million barrel mark. However, if we can't galvanize, or if we cannot, being the strong word, galvanize capital, then we're going to continue to see our production drop.
Well, I understand you sort of tried to explain one or two things, but then 2030, 3 million barrels per day, and this is 2026. I look forward to that. Now, OPEC Plus has approved a 188,000 barrels per day production increase for September. What do you make of this? Because for some, this only changes little in the near term because the Strait of Hormuz remains constrained. What are your thoughts?
Look, I think OPEC Plus is already anticipating a reopening of the Strait of Hormuz. And we're hoping that two things will happen. Prices will moderate back to the lower 70s, high 60s that we had it, before the Americans invaded Iran. But what the hope here is that the supply shortages that happened as a result of the Strait of Hormuz will very quickly ramp up, and supply would resume back to the market. The reality is that OPEC is betting on a reduction in prices. And that's why you are continuing to see them look at an uplift in production. But if prices start to trend towards a $50 type level, then you would expect that OPEC Plus would respond by trying to curtail production as much as possible. But don't forget that there are a number of parties that have already that are beginning to resume production. So you have the Venezuelans, for example, who are beginning to come back into production. Iran is likely to increase production post sanctions as part of the deal. So there is going to be a global increase in supply. And I think that OPEC is just already anticipating that and ensuring that they are positioned accordingly.
I'll try to take you back to the first thing you said, talking about the envisage that the Strait of Hormuz will be open very soon. Do you see that happening, and how soon? Because Iran says they are speaking with Oman. They don't want to speak. They are not speaking with US, and the back and forth.
When President Trump, went into Iran, they've won that war at least 60 times since they started bombing. And as of today, we're not even sure that the strait is open. In fact, based on information that came out yesterday, Iran and Oman are having a bilateral conversation around the strait without even talking to the US.
Yeah.
Look, the truth is that the US have gone into a forever war, and somebody has to blink. We think that the Americans are going to blink first. They've literally set the world on fire and want to go back home and leave the rest of us to deal with the consequences of their actions. But the reality is that, look, at the end of the day, the world needs the Strait of Hormuz to reopen, and it's only a matter of time that it does reopen. And I expect that, that's going to be sooner rather than later.
All right, that's quite interesting. So talking about what OPEC is planning to do, what exactly does this mean for Nigeria and Nigeria's production outlook?
So look, I mean, Papacha, we talked about it at the beginning of the show. The reality is that Nigeria can try to increase production as much as we want to. The only way we can sustain production increases is if we're investing, if the fiscal regime continues to encourage investing and capital formation. We probably would not get a major increase in our quota because, I mean, the reality is that there's not much capacity for us to increase in the short term. I think the bigger upside is in how we're able to unlock, you know, the locked-in production, the short-in production, and, you know, and maybe we can increase our production and focus on local refining. You know, those are the upsides that Nigeria can look to have in the short term.
Thank you so much, Femi Oladehin, Managing Director, Argentil Capital Partners, for sharing your thoughts with us on the show today.
Thank you so much. Always a pleasure.
Same here.